What's up, guys? Welcome back to the channel. In today's lesson, we're going to be breaking down price across different time frames. We're going to be talking about top-down analysis. Top-down analysis is a crucial part of every trading strategy. As a matter of fact, when you understand how to do top-down analysis perfectly, you're going to stay ahead of market changes because top-down analysis is going to help traders to anticipate and adapt to changes in the market condition, reducing the risk of being caught off guard. There are many ways you can actually do top-down analysis. I've actually explained some of the patterns I use in approaching the market and analyzing the market across different time frames. But in today's lesson, I'm actually going to show you one of the favorite ways I use in doing this. I always do it with examples I take in the market, which is live trades we usually share to the community or personal trades I take. Now, when you understand top-down analysis, it's going to help you understand the market sentiment. You're actually going to filter noise in the markets because understanding market across different time frames is going to help you secure a lot of profits in the market, and it's actually going to improve you as a trader, improving you in the sense that it's going to help you enter and exit positions at optimal times, which is exiting positions and entering positions at specific times, which is actually the best time to trade. Okay, so I'm going to use this example. It's actually going to be one example for today's lesson because I want it to be a very quick lesson. No need to waste time explaining one thing, okay? I'm actually going to show you one of the top patterns I use in doing my top-down analysis. So if you look at this particular pair right here, if I try to zoom out, I'm going to see that time is in an uptrend. Now, if you want to do top-down analysis, you can actually do it with three different time frames, right? And do top-down analysis with different time frames, higher time frame, medium time frame, and your lower time frame. But in today's lesson, I might use just two time frames. So by just zooming out, you can see that price is clearly in an uptrend. So if you want to look for trade opportunities on this particular instrument, it's necessary that you look for your buy opportunities in this case. Now, another thing I do when I want to do my top-down analysis is trying to find my daily high and daily lows. Now, if you look, I'm currently on the daily time frame. So here on the daily time frame, where is my daily high? This is currently my daily high right here. So this is very, very important to identify. Now, another thing I like to identify is my swing structure. So this is actually my higher high. And if you want to mark the most obvious higher low, this is the most obvious higher low in this case. If I go by the way I mark my structure, this particular pullback we had before the break of this high, this is a very valid pullback right here, and this is the most obvious one which everyone knows. Now, considering I'm on the higher time frame, because this is actually the daily time frame, do you know I can actually consider this single candle pullback right here? We have a single candle pullback right here, and a lot of people don't usually consider this. So this is a valid pullback for me when I look at pullbacks, provided I'm seeing it from a higher time frame. So this is a valid pullback for me right now. Now, marking here as a valid pullback and a valid break of structure, this simply means that my swing structure is currently this low we have right here and this high. So what does this mean? This means that I can get a trade opportunity inside this particular range. This is what the higher time frame is telling me. Yes, price is in an uptrend and I need to buy. Now, it's possible that I'm going to get a trade opportunity inside this particular price range, this high and this particular low we have right now. So what I did here on the higher time frame is simply identifying my price range and knowing where I could possibly get a trade opportunity. Now, if I'm to drop to the 4 hours time frame, because you'll be going from time frames to time frames, that's why it's called top-down analysis, okay? Going to different time frames. Now, here on the 4 hours time frame, what can you clearly see? This was the most obvious pullback we had. This was the obvious pullback we had before price continues to the upside, and when price continued to the upside, we'll be able to spot this break of structure right here. Now, this was the second pullback I marked on the daily time frame where I said is actually valid. This one we have right here is a valid pullback, and after that, you see price continue to the upside, and it was able to break structure to the upside. Now, if we want to consider the most valid pullback on this particular time frame, which is the 4 hours time frame, a lot of people is going to focus on this particular one we have right here as the most valid pullback. Why? It's a three candle pullback. Now, this is time to look for trade opportunities, because looking for trade opportunities is actually very, very important. This is the main reason you are in the market. You are not in this market to just do your analysis and sleep. No, the most important thing is finding areas which you could take a trade from. Now, when I had meeting with my VIP students, we actually looked at this particular instrument, and I was able to spot two areas which I can take a trade from. The first area I marked was this particular high right here. This was the first level I marked, and based on the confluence we use while trading smart money concepts, this is a valid setup for me. Now, someone is going to ask me, this is the market being an uptrend, and you should be looking for your buy opportunities. Then, why are you marking a supply level when you know that price is clearly in an uptrend? Now, the truth is this. I'm looking to catch the market correction around this area. This is just an anticipation. Most times what we do in the market is doing what? Anticipating. And why is this a valid setup? Firstly, we can clearly see that we have the sweep of liquidity right here. Not just that liquidity sweep, price broke underneath this particular low, but sometimes I don't consider this break underneath this low as the valid market structure shift, because price couldn't close above this high. Now, the current and the correct market structure shift is the one we have underneath this low. So this now gives me the confidence to take a sell if price returns back to that point of interest. Now, we have another confluence which is going to give me the confidence to take a sell from here. This is when you measure with your fib tool from the low to the particular high. Now, if you measure with this fib tool, what can you clearly see here? You can see that the particular point of interest we have at the high is at the premium level. And we usually sell from the premium level and we buy from the discount level. Now, since we buy from the discount level, I think I should just separate this. So separating with the single line we have right now. So this line we have over here now has done the separation. You can decide to sell from the premium level, and if price drops into your discount level, you can go ahead and buy. Now, here is going to be the point of interest we're going to trade from if price eventually drops into the discount level. Now, the first level I can clearly see right here is this particular point of interest we have over here. Okay, we have a very good point of interest over here. And if you look at this particular point of interest, it meets the criteria. Firstly, this point of interest aligns with the fib level, sitting at the discount level. Now, let me delete this line. Now, another confluence we have is that we have an efficient price action around this area. Remember, this is your price range, this low and this particular high. So we are looking for trade opportunity inside this particular price range. Now, if you look at this price action we have over here, what can you clearly see? Price is efficient. We have an efficient price action right there. There is no inefficiency. So where do we have an inefficiency? We have an inefficiency around this particular area. Not just that, price also built some inducement area. So this particular level right here is going to serve as my liquidity inducement area, which I sometimes call a smart money trap. So this is the whole trade opportunity right here. Now, the truth is that this particular setup, I didn't spot it on the 4 hours time frame. I dropped on the 2 hours time frame. So let's see what it looked like on the 2 hours time frame. So here is the 2 hours time frame, and you can clearly see the whole trade opportunity and what it looks like. Although during my drawings, I did some refinements based on my zone. And if you look at this price action we have over here, you can clearly see that the price action we have over here is still efficient, which means that the selected point of interest is actually a valid one. So what I'm going to do right now is to play price forward and see how price reacts to this level. Now we start getting a pullback. Now, after the pullback, you see price react to your inducement area. You see immediately price came to the inducement area. We now have a little reaction. Now, price shifts the liquidity at the inducement area, and this is where we have the mitigation of the points of interest. And you see price rapidly moves away from that particular point of interest. So this simply explains that the selected demand level is a valid one. Now, let's play price forward and see. Now price starts to slow down a little, then it came back to rebalance this liquidity gap we have over here. Now, if you want to maybe use an entry confirmation, this is when you go down to a lower time frame. So this is currently the 30 minutes time frame. Sorry that the chart is a little bit dirty because of a lot of drawings. I'm sorry about that. Now, this is the lower time frame, and if you want to use entry confirmation, this is where you can get involved. Now, based on how I teach reaction to the downside that took liquidity underneath this low is your point of interest. So if you marked it that way, you're going to see that price came back for the mitigation. But the truth is that I don't trade zones like that because I usually go for refinement. So if I refine my zone, this is a missed trade opportunity. Price couldn't get involved. Price couldn't tag anyone trying to use entry confirmation into this trade. Price didn't tag during. Now, what price did is it rebalanced the liquidity gap right here, and we'll have the reaction to the upside. So let's go back to the 2 hours time frame. So here is the 2 hours time frame, and we continue playing price forward to see how far price reacts. Now, price came back again, but still didn't get to the lower time frame zone. But the truth is that price is now reacting to the upside. So let's wait and see. Now price starts to react to the upside, and price also offered 4% around this particular high. So you see, price react to the upside, came very close to the supply level, and is now reacting to the downside. But price is yet to mitigate the supply level. So this is the current price action we have. This is the current price. Price is yet to mitigate the supply level. Is the supply level still valid? Yes, the supply level is still very much valid. It could be an invalid trade if price prints some price action, which is going to make it a low probability trade opportunity. But for now, based on the recent price action, it's still a valid zone. Now, just like the question I asked then, why are we selecting a supply level when we know that price is clearly bullish? Now, there is what we call high probability trade opportunity. The supply level is a high probability trade opportunity. And another important thing why we selected the zone and we have confidence that it's going to hold price is that we get in during the impulsive move from the demand zone. Okay, during this impulsive move, this is when we get in from the demand zone. Now, what I was actually expecting in the market is that when price mitigates the supply level, we're going to trade the correction because this is how price moved. Now that we got involved in the demand zone and price reacts to the upside, this is the impulsive move. Now, during the correction, this is where you're going to get involved from the supply level. Then we're going to anticipate the continuation of the bullish move. But currently, price is now correcting. So there are some price action we're going to see, which is going to make this low probability trade opportunity. But for now, we're still going to anticipate that price is going to mitigate for another correction. Okay. So just like I said, I teach what I trade. Let me show you on our VIP community. So here was the trade opportunity when price offered 3.5%, but price already hits the profit targets. This is the exact trade opportunity which I'm explaining, just that I don't do the markings again because the students you have in our VIP community already understand all these concepts, and this is the trade opportunity when it was shared. Okay, this is the trade opportunity when it was shared. So this one is another similar one, but just like I said, I'm going to explain with just a single example. So our mentorship is currently running. The mentorship is still running. These are advanced smart money mentorship. If you want to trade using the advanced smart money concepts, you can decide to enroll for a mentorship where you have access to our smart money course, being part of our weekly chat breakdown. You're going to be part of our VIP support group, which is the support group I just showed you. These are VIP community. You're going to be part of our premium possible setups, which is the trade opportunities we share, and you're going to be part of our weekly meetings. We usually meet during the weekend. So if you want to enroll, you can go ahead and pay now. Now, if you need more details about the mentorship, you can go ahead and read up when you click on see more. So no need to explain further. You can go ahead and see for yourself. If you think you need a mentorship, you can enroll. And if you think you don't need it, you can go ahead and disregard. So thanks very much for watching today's lesson. See you in the next one.